Hi there, welcome to Grain TV. I'm Kevin McNew. It's Thursday, January 12th. That must mean it was a crop report day. And on the board, we had all green. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, beans crushing it to the upside. Front month March gaining 28 cents, just a hair below 10.40 on the close. Corn was up 3/4 cents, and wheat in Chicago gaining 7 1/4. News today was all about the USDA crop report. We had quarterly stocks, we had WASDE numbers, and we had plantings for wheat, for winter wheat in the U.S. Let's take a look at some of the data that USDA threw at us. Let's start first with quarterly stocks. Quarterly stocks, not surprising to us, was a little bit high on the high end of expectations for corn and wheat because feed use was lighter than expected. Beans, on the other hand, came in lighter on quarterly stocks, and this was really the reflection of a trim by USDA in their final soybean production estimate in terms of yield and in terms of acres. All totaled, it left about 60 million bushels lighter on the carryout projection for ending stocks for soybeans. So where we were expecting about a 468 million bushel carryout for beans, we ended up with 420, and that got the market very excited today in beans and saw a flurry of buying activity. Looking at the other U.S. ending stocks numbers, not real big changes here, but in line with what we saw or what we were expecting. We saw USDA trim their feed use estimate. They did bolster ethanol use. Overall, it was a slight drop in carryout to 23.55 versus 23.85 expected. Wheat coming in on the high end because of higher quarterly stocks. So overall, it was really a bean market to be bought today. Corn was just simply along for the ride, mostly down for much of the day, only managing to close a little bit higher on the end in sympathy with beans. And wheat got some input from the planted acreage number that we'll talk about in a minute. But before we get to that, let's talk about world carryout numbers. These numbers also reflecting slight modifications by USDA to some global players here. First of all, in the case of corn, no real change here on the corn numbers, in particular in South America. They held pat on their Argentine and Brazilian corn forecast numbers. So really the only major change was what happened in the US numbers. On beans, they did increase Brazil's forecast from 102 million metric tons to 104 million metric tons. But somewhat surprisingly, they kept Argentinian production unchanged at 57, even though we've seen a very wet planting season there, and there's the expectation that not all those bean acres will get planted. In the case of wheat, they bumped Argentinian wheat production. They also bumped Russian production. That pushed ending stocks up 1 million metric tons higher than expected. So really, more of the same. We continue to have very, very burdensome wheat stocks. We continue to have very ample corn stocks, and beans is doing well in terms of stocks because of expectations of very large South American production. But the real sort of big number that didn't get much response but is a big game changer for wheat maybe is the very, very big cut in U.S. wheat plantings this fall. Not surprising. There was a drop from last year. Trade had been looking for a 2 million acre drop, but instead we got a 3.6 million acre drop, a 10% drop year on year. That is the lowest winter wheat plantings in 107 years. That's right, over 100 years have we gone without this low of winter wheat plantings. But it is certainly needed in light of the world swimming in wheat supplies. So certainly it's a good sign for things to come, but it's probably not going to change the course of direction in the wheat market anytime soon. The other thing to keep in mind is this big drop in wheat plantings probably signals an even bigger ramp up in soybean production this spring. Analysts have been talking 3 to 5 million acre increase in soybeans. I would suspect that we're now talking 4 to 6 million acre increase in soybean plantings this spring because of the registered drop in wheat plantings. So keep that in mind as you're making your pricing decisions. I think we're going to see very, very big bean acres March 31st when USDA gives us those numbers. But in the near term, beans shooting through the roof. Old crop March gaining 28 cents. Even new crop November beans was up in sympathy. But today's action was really just bolting higher. after this market report. You can see on the 5-minute bar chart here from Grain Hedge's trading platform the big spike up after the announcement of the bean stock number. You can see for the most part we traded in that 1026 to 1032 range for the better part of the rest of the session. It wasn't until about the last 20 minutes going into the close that it was clear the market wasn't going to sell off and that we got more short covering ahead of this. So we basically closed on the high with front month March closing just a hair below 1040. The next objectives will be those previous highs set back in December and the 1060 mark. I'm not sure we're going to make it there, but certainly there's some follow through here, probably going into tonight's session and into the weekend, and it's a long 3-day weekend as well. So I wouldn't be surprised to see some follow through buying here ahead of the 3-day weekend. That's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you in your own grain trading situation, visit us online at grainhedge.com. Have a great day, and we'll talk to you on Friday.